Hi, I'm Kandie Frederick with Country Real Estate. A lot of homeowners are staying in their home with a 2 to 3% interest rate locked in, but now they need more space or maybe they're ready to downsize. How can that rate still help them profit at the selling table? Did you know that some loans are transferable to the next buyer, meaning a buyer can take over your loan once the lender approves it and keep the low interest rate that you have? Would this be valuable to a buyer who might pay more just for that incentive? And how do you get started to find out? Today, I want to answer these questions for you. Number one, what does assumable mean? An assumable loan means a buyer can take over your existing mortgage, the rate, the balance, and the terms, instead of getting a brand new loan. If your interest rate is way lower than today's market rate, that could make your home much more attractive. Number two, why assumable loans can be attractive. They can offer a lower interest rate than current market rates. There's potentially a lower payment and lower closing costs compared to a new mortgage. An appraisal and reports can often be waived, saving a buyer more money. And assumable loans can make a property stand out in marketing when you're competing with other homes on the market. Number three, how to know if yours qualifies. Here's the quick test. If it's FHA, VA, or USDA, it's likely assumable with the lender approval. Conventional loans are not likely to be assumable as they have a due on sale clause. A quick note, VA loans can actually transfer to anyone, not just a veteran. We'll go into that in a minute, but it's useful to know about. If you're not sure if your loan is assumable, you can look at your loan documents or call the number on your mortgage statement to find out. Number four, challenges and considerations with assumable loans. A few things to know. So, if you have paid down your mortgage to $400,000 but your sales price is $800,000, you might need a buyer who has a $400,000 down payment if they're going to assume your loan. Or they'll need to get secondary financing to cover the difference. A buyer will also need to qualify for the assumable loan, and you should know the loan process can take a few months sometimes. The lender will also require your active involvement to respond timely to their calls and emails during the escrow. With VA entitlements, the seller could lose the ability to use the VA benefit again until the entitlement is restored, meaning the loan is paid off. These are all factors to consider. When you're selling, assumable loans are worth knowing about if it makes your home more attractive to a buyer. If you want to find out if your loan is assumable and if it could help you sell for more, send me a quick message. I can help you check your loan type and walk you through the process. I look forward to hearing from you.